Welcome to the YouTube channel Trading Mindcast. Hey everyone, today I'm diving into some powerful takeaways, drawing inspiration from foundational work like Mark Douglas's insights on whether success comes from fundamental, technical, or mental analysis.
Yeah, it's a great topic. Hope you enjoy. We're really aiming to unpack what separates the consistently successful traders from, everyone else.
And the core idea we're exploring today, based on this material, is pretty provocative, isn't it?
It really is. The central argument is that your mindset, your psychology, that's the biggest factor. More important even than your technical skills or fundamental analysis.
Which feels, kind of backwards at first glance. People pour years into learning charting, indicators, economic reports.
Totally. But think about it. The sources explain why this psychological edge is so critical. We've all seen or heard of traders who are technically brilliant, right? They know the patterns, they understand the fundamentals.
Cover smart people.
Exactly. But they still struggle, or they blow up accounts. And the reason? It often comes down to, their underlying beliefs. Things like fear stopping them from taking valid signals, or greed making them hold on too long.
Or just a lack of discipline, maybe? Not sticking to the plan when things get tough.
That's a huge one. Discipline. The knowledge might be there, but executing consistently under pressure, that's a mental game.
Okay, so let's connect this to how the sources view the market itself. They describe it as inherently random, unpredictable.
Yeah, fundamentally unpredictable in the short term. You can analyze probabilities, you can find setups that give you an edge over time, but any single trade, its outcome is essentially random. You just don't know for sure.
That's kind of terrifying, but also maybe freeing.
Both. And that inherent randomness is precisely why the mindset piece is so crucial. You absolutely have to train your mind to think in probabilities.
Not certainties.
Never certainties. It's about understanding that you're playing a numbers game over a long series of trades. Each individual trade is just like one data point in that series.
Which brings us to this really powerful idea that's highlighted. The strength in genuinely accepting, I don't know what will happen next. How does that become a cornerstone?
Well, think about the pressure it removes. If you expect to be right, if you need this specific trade to work out, what happens when it doesn't?
Crushing disappointment.
Yeah.
Questioning everything. Maybe revenge trading.
All of the above. But if you truly accept you don't know the outcome beforehand, a loss becomes, just a loss. It's a statistical event within your strategy. It doesn't feel like a personal failure.
Okay, so it sort of decouples your ego from the trade outcome.
Perfectly put. It decouples the ego. It softens the emotional blow because you've already accepted that losses are just part of the business of trading probabilities. You hear stories about legendary traders. They often talk about their fallibility, their uncertainty. It's not about being a perfect predictor.
So if accepting uncertainty is step one, what are the practical disciplines needed? What does the source material point to?
Okay, several key things. First, having crystal clear objective rules for entry, exit, and risk management.
Rules you define beforehand, not in the heat of the moment.
Absolutely critical. Second, applying strict risk management on every single trade. No exceptions. Ever.
That sounds like the really hard part. Resisting the urge to bend the rules just this once.
It is the hard part. And that leads to the third element. Total, unwavering discipline to follow those rules and that risk plan. Even when your gut is screaming, or you just had a big win and feel invincible, or you just had a loss and feel scared.
So the ideal state of mind, it sounds like neutrality. Being okay with whatever happens once the trade is on.
Yeah, neutrality is a good word. Acceptance of any outcome, win, loss, break even, without getting emotionally high or low. It's not about not feeling things.
Right, you can't just switch off fear or excitement.
No, you're human. But it's about managing those emotions, not letting pride after a win lead to reckless overtrading or despair after a loss make you abandon your edge. It's about staying flexible and objective.
And this ties into another concept mentioned. Not trading is also trading. Explain that one.
Yeah, that's about patience and discipline too. It means having the maturity to sit on your hands, sometimes for hours or even days, waiting for a setup that perfectly fits your rules.
Instead of forcing trades out of boredom or anxiety.
Exactly. Avoiding those emotionally driven, low probability entries. Recognizing that preserving capital by not trading is just as important as making profits when the conditions are right. That's a sign you're thinking like a professional.
This definitely sounds like it requires real internal work. It's not just learning a setup. How do you actually build this kind of robust mindset?
It's presented as a very conscious, deliberate process. It means actively looking at your own beliefs about the market, about risk, about yourself, spotting the limiting ones.
Like I have to be right all the time, or making money should be easy, or I can't afford another loss.
Yeah, exactly those kind of thoughts. You identify them, challenge them, and then actively work to replace them with beliefs that are more aligned with how markets actually work, beliefs centered on probability, discipline, and acceptance. It's like rewriting your mental code.
And what about the trading strategy itself, the edge? Is that still important?
Oh, absolutely. You need a statistically validated edge, something that over time should produce more profits than losses. But here's the ticker the sources emphasize.
What's that?
Consistently executing that edge, sticking to it through thick and thin, is even more critical than the theoretical perfection of the edge itself.
So a decent strategy executed flawlessly beats a brilliant strategy executed poorly because of psychological interference.
That's the argument, yes. Because a brilliant strategy is worthless if your fear or greed prevents you from actually trading it according to the rules. Consistency of execution is paramount.
That really shifts the focus, doesn't it? Away from hunting for the Holy Grail system or obsessing over the P&L of the last trade.
And squarely onto the process. Are you following your rules? Are you managing risk correctly? Are you maintaining emotional neutrality? That becomes the measure of success, not the outcome of any single trade.
Which again circles back to that core idea. The market is just going to do what it does. It's random. It doesn't care about your positions or your needs.
Exactly. It owes you nothing. Success doesn't come from trying to bend the market to your will, because you can't. It comes from mastering yourself within that unpredictable environment.
Finding that balance, then, between wanting to participate, wanting to win, but also accepting you have zero control over the outcome once you're in.
That's the tightrope walk. It's about managing your internal state, your thoughts, beliefs, emotions, so you can navigate that uncertainty effectively and execute your plan.
Ultimately, the conclusion from this line of thinking is really clear, isn't it?
Crystal clear. Your conscious mind, how you choose to think, the beliefs you choose to cultivate, the discipline you choose to enforce, that's your ultimate tool. That's the primary determinant of consistent success in trading.
Okay, let's try and summarize the key takeaway here for everyone listening.
Sure. I think the main point is this. Achieving true trading mastery isn't just about getting better at reading charts or analyzing news. I mean, that stuff matters. You need an edge.
It's necessary but not sufficient.
Right. The real battle, the place where most people succeed or fail, is internal. It's about mastering your own psychology. It's about developing unwavering discipline, especially when things get uncomfortable, all within the context of accepting market uncertainty. It's an inside game, first and foremost.
So here's a final thought for you to chew on. Given that markets are inherently random and unpredictable, how does shifting your focus away from trying to predict the next move and towards managing your own internal reactions and sticking to your process?
Yeah.
How does that fundamentally change how you view risk and maybe even how you spot opportunities? Something to think about.
Definitely something to mull over. It changes the whole game.
Thank you for being with us as a listener.
Yeah, thanks everyone.
If you enjoy this podcast series, support us by subscribing and liking.